Oh, hello everyone. Welcome to the second of today's webinars, or at least it's the second one for David and I, but it may be the first time that you're joining us for a look at what is happening on the futures market. So thank you so much for taking the time to come along, whether it's the second time you're with us or the first time. It's lovely to have you all here. But as always, before we can start, may I draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And very quickly, before we go to the charts, as you know, those of you who come regularly, is we look at the charts through what we call the prism of volume price analysis, which is looking at the intimate relationship between price action and volume to tell us not only the likely direction of the price action, but also whether when a move is in play, whether that move is genuine or not. In other words, we look for anomalies, and it's all explained in this book, which is available on Amazon. And the book also has a companion where basically it's over 200 worked examples drawn from stock market, indices, futures, and some commodities. There is a forex version as well, because the great thing about price action, first of all, it's cyclical. That's the first thing. Secondly, it does repeat. It doesn't repeat in exactly the same way, but the same setups, the same patterns, the same candle configurations, they do appear again and again. And the differentiator as to whether that pattern, that combination of candles is actually going to play out, because that's just price action, is the volume. The volume will confirm it or otherwise. And that really, there's this cliche in trading and investing that we all need to, we need an edge. What is your edge? Well, to be honest, if you use the VPA as the methodology and volume, even if you just use volume, that is what your edge is. Because once you are able to look at the charts, you can't unsee it, as it were. Once you understand volume, you can't unsee it, and I will always be drawn to, as I said, those anomalies, those confirmations. Hold on, could you hold on a second? We've had an awful lot of spam calls today telling us that our internet is about to be removed. Just bear with me a second. Apologies about that. Right, VPA, as I said, price action and volume, but it actually encompasses 5 separate elements: price action, volume, candles and candle patterns, and support and resistance, and all overarch with time. This is your foundation. This is your, if you like, this is your starting point. On top of that, you then add all whatever indicators you want. We have proprietary indicators that we've developed ourselves, but you can use Bollinger Band, you can use GAN, you can use moving averages. It's entirely up to you. They will help you. They will help you with your trading decisions. They will also help you perhaps show a potential trading or investing opportunity. And it's all overarched with time, and that's not just the chart that you're trading, but multiple time frames. Now, the best thing to have a look at it is actually to see it on the charts. Before we go to the charts very quickly, let's have a quick look and see what's been happening today. Obviously, we've had 2 extraordinary days on the markets. It's all a bit meh. It's everything sort of died down a little bit. It's one of these periods where you have bursts of volatility, and then it's as if the dial is turned down on momentum, as it were. The US, the 30, that's the YM, they're up sort of 47. What's happening with the Nasdaq? The Nasdaq is a little bit better. It's up 80. There are an awful lot of earnings coming out today. I think Apple has reported already, David. I'll have to have a look. Just keep, be aware of what is happening sort of with the earnings, because it's it's a pretty big week for that. In terms of the news, the fundamental news, which could possibly have an effect on. Right. What are we waiting for? Well, we've had the ADP, we've got the final services PMI, and what have we got? We've got the we've got the ISM later on at 3. Where are we? And we're just waiting for the cash open to happen, and we've got the crude oil inventory. So obviously, if you're in oil, then that's something to be aware of. But I don't think there's anything more than that. I think mostly it's all, as I said, and there's an OPEC meeting. So if you're on oil, you've got to be aware of that as well. So generally, sentiments have been very bullish for the last couple of days. It's kind of died off a little bit, as partly because as a sort of reaction to it. But more interestingly, and we'll have a look at what I see on my charts, and have a look at the NinjaTrader charts that David has. So he's got Ninja and TradeStation, I think. Basically, futures. I know I've talked about this before, but you can trade these markets via an MT4 or an MT5 broker. They're not going to be the actual futures contract itself, but it's a synthetic contract that's put together by the broker. But the price is pretty much what you would get on a futures chart, and it just allows you to enter a market with very, very little capital. And also, look at these, see the setup, see the trading opportunities that, as I said, I've got silver here. I've also got one for a version of the YM, which is what is known as the US 30. That's going to come up in a minute. And the configuration of charts that I have on MT4 is very, very straightforward. Let me just go back to silver. And I want to do silver because silver is actually a metal that we wrote about, was it about a month, 3 or 4 weeks ago, David? And in fact, one of our longer term targets was $30. And lo and behold, it has actually got there, probably with the help of the Wall Street Bets community and the Robinhood and the Robinhood traders, as you all know in the media. There's the news has been how retail traders, independent traders, have kind of taken on the hedge funds and the big guys, and good luck to them. But the key thing is once you are in a move and a move has developed, as a trader, you do have to, you're not going to hold these things forever. So when the price action and volume tell you, and the signals come on the chart that possibly there is a reversal in place, holding on for the sake of it, well, I would say, well, you're here to make money. You're here to take advantage of these price moves. How these price moves have come about, through manipulation, through market makers, through this groundswell, if you like, of trader activism, fine. But as a trader, you've got to take the decision. You're in profit, take some profit. By all means, leave some money on the table. That's fine. But you still have to take the emotion out of trading. Don't trade with an agenda, and certainly don't revenge trade, and keep your emotions in check, as it were. But looking at the daily chart for silver, which is quite interesting, setting aside all the the other speculation, this was going to be another GameStop saga, as it were. Sorry, that's just the cash market open. Right. What do we actually see here in terms of silver? Silver, until this recent price action, let's go back here. It had actually really quite a nice run up. You have a little 2-bar reversal. This is what I mean about candles and candle patterns. A 2-bar reversal, and then it had quite a deep plunge. In moving lower, it actually triggered the volatility, our volatility indicator, which we have developed. It's based on average true range. Volatility is measured in 2 ways. You either use standard deviation, which is where you have Bollinger Bands, or you can use average true range. We have used average true range, which you can, Bollinger Bands entirely your choice. What happens is this indicator is triggered once the price action in this particular time frame goes out of, as you say, its ATR. It was triggered. It actually also went back down to the volume point of control. But you can see here, although there was a plunge, there was also some decent buying under there. Why? Because I hope you can see this, but there's actually a wick to the bottom of this candle. So buyers came in, possibly because it was a level. It was around $24. There would be pending orders, whatever, because they thought, oh, it's fallen, but it's going to bounce back. What happens when the volatility is triggered? This indicator triggers. You very rarely get a follow through. I appreciate this is the daily chart. Better, easier to see it on the faster charts. What tends to happen is you immediately get a retrace to within the spread of the volatility candle, which is exactly what we have. And then we have one or two things. We either have a reversal. If you haven't had a follow through, you either have a reversal or you have a congestion. And in fact, since the 7th of January, that is what we have had. What also happens with the volatility candle is the high and the low of the candle of themselves become key support and resistance levels, and key levels that you have to watch, so that once all this noise, once all this momentum, once all this volatility has died down, then the instrument has to decide, well, is it going to carry on in the original direction, which was obviously down, or is this setting up for a reversal? But what we've had is we've had quite a long period of, it's really a period of congestion. Now, this is the daily chart. As an intraday trader, the ranges of these candles possibly could have afforded some trading opportunities, but the volume point of control at 24 has given it a solid base for, if you like, preparing for the move higher. We have these two candles. We have some decent volume underneath them. I appreciate we've got some wicks to the tops of these candles, and then we have the whole the whole Wall Street bets things, and they're all going to take on the the big guys and push it higher, which I have to say they did. It broke up above the high of the volatility candle. One other point just to make is, regardless of the volatility, the momentum, support and resistance levels, they do they do hold. They even if the market is in mayhem, as it were, they can they do what they're supposed to do and give you these, if you like, these anchor points on the chart that you think, right, I know it's going to get there. Now what's going to happen next? Then you look at the volume, see, is it going to push through? Because when you get to these important levels, these key levels, whether it's marked by the volatility candle, the volume point of control, this is support and resistance based on volume. This is volume and price action over time, as are these bands that you can see here, and then these single lines and hashed lines. The solid line is slightly is stronger than the hatch line. So we know what the high is. Then it was given this lift, if you like, from what is going on elsewhere, and up it went. There was a gap up, and you have this candle here. Again, we had another volatility trigger because it was outside of the average range. A ton of volume underneath it, and a wick to the top of the candle. So given what we know is likely to happen after such a candle is triggered, what was the response? And that is the response, and we've had that, and that was yesterday. So it tells us it is volatile. Is it tradable? Absolutely. So today, what is going to happen is that it's a very big down candle, a lot of volume underneath it, but for the range of the candle, it's, if you then, with VPA, you've got to go and do a bit of benchmarking and look at previous candles of similar range, and look at the volume underneath it. It doesn't look particularly anomalous. So whether that's going to carry on lower, or whether in fact it's we are going to get a reversal, we're going to have to see. But as a day trader, in a way, do you actually care? Because the very definition of a day trader is you are here to look at an opportunity, spot the opportunity, look at and take it. If it's to the upside, fine, and if it's to the downside, fine. If it's to the downside, it tends to move faster than the upside. Although with a gap up, that's probably as I said, it's given it a little bit of extra oomph, as it were. The other time frames that I've got here, I've got the hourly chart. And going back to the support and resistance again, using a Camarilla, you can use a Fibonacci, you can use whatever, whatever works for you. The reason we use Camarilla, 2 reasons. First of all, it gives us 6 key price-based levels. On the hourly chart, these levels are key, they're in play for the rest of the week, and it's the 2 most important levels are the R3 and the R4. What the indicator also does, it also gives you little sort of messages up here on the left-hand side. You can turn those off. You don't have to. They're not signals, but they just tell you when it is approaching. At the moment, we're just on possible. It's a mean reversal trade. It's between two levels. So we just have to be aware. Wait until the price arrives at one of these key levels. So in terms of levels and their authority, if you like, a level on a slower time frame, certainly on an hourly chart, these levels are on the hour up to and including the day, are going to carry a lot of weight. And it's when you get a confluence of such levels, particularly when they combine with the faster time frames, because the other thing with this indicator is the levels on time frames up to but not including the hour, they are refreshed every day, after the market closes, so you get another set of levels. And this is how you play it, as I said, support and resistance, even through the maelstrom of volatility, support and resistance levels will hold. And if we look back here, this is the gap up. As we can see, it actually paused at the R5, didn't quite get to the R6, it reversed off there. Back, as I said, the 2 levels tends to happen around the R4 and the R3. You can get a little bit of congestion, sort of retesting all the time, but then it broke through. Did break through the R3 again, a retest, and down it has gone, and in fact it's gone back to the S3. It almost, in a way, I've seen charts where on the week where the price is simply, you could almost use this to use an expression, swing trader. You see the R3 and the S3. If it reaches, though, you can almost expect that the price will swing between these 2 levels. And of course, as always, you look at what is the what is the volume doing? Is this price going higher? Is it supported by what you see? Well, what have we got here? We've got a blue candle. We've got rising volume. It's pulling back a little bit, but we'll just see what happens. So that is on the hourly chart. As I said, and you compare that with what you see on the I just happen to have the 15-minute chart here. With regard to actually trading, say, well, what do I do? I'm on the faster time frames. I've actually got a Renko chart here, which is a non-time based chart, and I've also got the 5-minute chart. So this kind of completes my 5 chart profile, as it were. And what this is actually telling me on the 5-minute chart, that I've been in a congestion phase. I've had volatility candles triggered. I'm actually below the volume point of control, which is volume-based resistance, and that itself will add sort of more downward pressure to what is happening at the moment. We've had the market open, the physical market open, so you've had this inrush of volume, and usually at this time, particularly when you have the cash markets open, the physical markets open, it's a bit like the session crossovers in Forex. Sometimes it helps just to let the price action calm a little bit before waiting to see where that direction, where this wants to go. It's had, had a big move yesterday. It wants to try, perhaps traders want to, push it higher, but it is meeting, it's not easy at the moment. So maybe a little patience. The Renko, what the Renko does, it gives us a geometric view of the price action. And the nice thing about MT4 is on this platform is that I can actually put the Camarilla levels on here. So you use this together with the time chart, and we can see here, we know it's below the volume point of control. We've got a kind of, if you like, a double top in terms of chart pattern. We've got the R1 here with this little move higher. With this is congestion. As I said, now we simply have to wait. So that's silver in the context of what's been going on for the last couple of days, using, as I said, elements from volume price analysis, which are the candles, the volume, the candle patterns, support and resistance. I really, I think people are going to get, I hope you don't get bored with me saying about support and resistance, but it really is all about support and resistance. Some people call it, okay, give it supply and demand. They are these anchor points on the chart where a price will reverse. It will get there and it cannot go, any further. Right, so that's what's happening with silver. And what I've also put up with is the YM. Let's have a look. As I said, looking at this again, looking at the date, I've got the same 5 chart set up. This week, this explosive move high. What's worrying is it came off the volume point of control, reasonable volume underneath it. And this is what I mean about an anomaly. This is a wide, spread candle. It's got a decent range on it, but it's got lower volume than that one. And if this market really wanted to motor higher, it's going to need a little bit more support than in terms of volume that we have here at the moment. Does that mean today's is, we are going to be looking to short? We're going to do what the market is, is showing us basically. But as I explained last week, we do always have to have in the back of our mind this broader picture in terms of what the shape and structure of these slower time frames are. In terms of levels, where are we at the moment? Well, the chart speaks for itself. We are on this R4. It actually hasn't been able to go through the R4. As we can see here, it's tried. Volume has fallen. It's fallen back. It's tried again. If you look at the volume, the bars underneath the candles, you've got compressed price action, falling volume. It's just bouncing along the R4. Now, if this goes through, where is it logically going to head for? Well, the logical point on the hourly chart is down here. The trend monitor is starting to sort of transition to not to red. It's in between color. So looking at the hourly chart, looking at the 15-minute, where are we? Well, we've had a volatility candle. Is that any surprise? No, because the physical market is open and we've had this huge inrush of volume. But because there's a volatility trigger, the chances are we may get a retrace back into there. As I said, we've got to wait a little bit to, for it to calm down a little bit. And really, what the Renko is telling us, we've got congestion. We just have to wait and be patient. Right, I'm going to pass over to David. If you've got any questions, just please drop them into the chat box. More than happy to answer them on anything we've said, either on the VPA, the indicators that we have here. So more than happy to answer them for you.
Hi everybody, and a very warm welcome. Good to have you with us. I know one or two of you have been here this morning, or since this morning, so good to have you back. I've actually got 3 platforms running simultaneously, so I've got a heck of a lot of data coming in. So I tend to tread fairly carefully with these charts. Basically, this is the NQ, and this is on TradeStation. This is with Interactive Brokers. I've got the time and sales window running down here. It was absolutely streaming through a couple of minutes ago. When you get all this volatility over here, obviously volume and order flow and go hand in hand. It's activity, its size, and it's all represented. Obviously, you've got volume down here, but in the window down here, which is literally time and sales going through, all these orders are orders that have been executed. It gives you a sense. Standing, sorry? They're not standing orders, these are executed orders. And it just gives you a flavor of, if for nothing else, just the speed. As I say, 2 or 3 minutes ago, this was running really rapidly. Some very big numbers. I think the biggest number I saw go through here was 176 in one order. So you're basically looking for much larger orders. The 1s and 2s, fine, that's just the noise level. What you're looking for is the double and triple figure orders, and then you're looking at how that is going to react, or how the market is going to react at any rate. Lots of volatility. You can see it up here. This is the radar screen for the NQ on various time frames, right the way through from 1 minute through to the weekly. You've got the trend monitor here, so it gives you an instant view on the positive or negative aspects of price action. You've also got trends, which is confirming that, so the two are confirming one another. And I think this morning it was up here somewhere in terms of blue, and this is now descended all the way down to the 30-minute. So it's giving you a sense of the bearish or bullish sentiment, because the beauty of it is it gives you a visual picture, because what we're always looking for is a trend to start in our fastest time frame, which in this case is the 1 minute. And if that is going to change in trend, in other words, change color, then the trend monitor is going to go through a transitional phase and it will turn blue. And ultimately where it will turn blue first is on your fastest chart, like the 1 minute. That will then move to the 2 minute, down to the 3 minute, 4 minute, 5 minute, and so on and so forth, right the way down the ladder. If it is a change in trend, obviously you have to determine that by looking at the chart, but this gives you a starting point, and it gives you a visual on what is going on for this particular instrument across all these time frames. These charts are all interlinked. I've got its symbol and interval linked up here, so it's across here, so you can click on any of these and this will then immediately show you that particular chart. So you've got the trends, which are very close to price action. You've got the trend monitor, which takes a much more considered view of price action. And then down here on this side, I've just put up the dynamic volatility indicator. So again, it gives you a heads up on how far back all these volatility triggers have occurred on the various time frames. And obviously it goes as no great surprise that as the markets got underway in terms of the cash markets, then you get an awful lot of volatility. So you're going to get this literally across the time horizons right the way throughout. So that's on the NQ, that's just on TradeStation. You can see where it is. This is the volume point of control. I'm just having a look across at another on trading view. Okay, the dollar's selling off a little bit. Just see where the VIX is. That's down in the sort of mid-20s, 24, 94, that sort of area. It's been in that region for an awful long time. And as we've said many times before, given the extent of the bullish momentum that's been driving this market ever higher, you would think the VIX would be down certainly around where it's traditionally resided, around the 10s, 11s, maybe even to single figures. So it's still riding very high in the market, and part of the reason for that is the sheer volume of options that are now traded, which they are distorting the volatility index to some great extent. Just go to the currency futures, click on that tab. Here we are. This is currency futures, a bit calmer here, not quite so manic. I've got the 6A, which is the Australian dollar, the pound dollar. This is dollar CAD, but it's CAD dollar inversed. This is euro dollar, this is New Zealand dollar, and I've got the dollar Swiss over here because I couldn't fit it over there. And again, similar sort of principles. I've got the same indicators on the charts. I've got the trend monitor up here on radar screen, and I've got the trend dots here as well. And I've also got dynamic volatility indicator, which tells you, where was the last time that a volatility occurred. And if you're looking for opportunities, it's not a bad place to start. If you're intraday, faster charts, you're looking for a volatility trigger, but potentially for congestion or potentially for a reversal to develop for an opportunity from that particular signal. So it's just a very compact way using the radar screen linked to the chart, and you can whiz through these very quickly. Obviously, for having only 5 or 6 futures, it's not so important. But if you've got hundreds of stocks, then it's a very fast way to rapidly sift them through visually, look for opportunities, hunt them out, and obviously have the indicators attached to the radar screen as well. Got the CSI here, as you can see. Just drop that out the way. This is on NinjaTrader, just on the 3 indices. Got the YM at the top, the NQ in the middle, and the ES on the right-hand side, all the same time frame. So that's on 5 minute at the top. And down at the bottom here, we've got this on the daily. So you can see what's going on in terms of both intraday and daily. The VPOC is very much in evidence on the 5 minute time frame. It's in evidence here, it's in evidence here, and it's in evidence here. So wherever you look, it's no great surprise. You've got a volatility up and down. You're trading around a particular point. You've got some very strong, this was a support level here, has now become resistance. You can see how it's been tested all the time, constantly bashing into that particular level. Very strong on the accumulation distribution indicator, that level. We've got another level here that's now been taken out. This was, again, would have been support. It was support certainly in this sort of area, but is now acting as resistance. So every time the market comes back up, it's not only hitting, it's not only approaching the volume point of control at this level, it's also running into price-based resistance from the accumulation distribution indicator here, these very strong levels. Because what the indicator does is every time a level is tested, it thickens the line. So if it's tested, a level that's been tested 3 times will be less well developed than one that's been tested 5 times or 8 times or 10 times. And in addition to that, where you get these little clusters, these little levels here in themselves are relatively weak. But when you actually cluster them together, you've got 2 here, for example, they become much stronger. And what you will find around the volume point of control itself, this yellow line, which is the fulcrum of the market at this particular, for this instrument, for this particular time frame, you will find these levels developing on the accumulation distribution indicator. So you get this very nice channeling effect of ceilings and floors developing, and you'll find it across all the time frames, all the markets. And if you're a breakaway trader, if that's your tactical approach to market, if you prefer congestion and then you're looking for breakaway, it's a great place to start in terms of moving away, because they are generally very well defined indeed. To drop down onto the daily, what's slightly worrying about the daily in terms of the move to the upside, if you look at these 2 candles here, this is the last couple of days, you've got the volume, which is relatively, I'd say it's average, but it's also falling away a little bit. And you've actually got a wider candle here with less volume under it. So it's not looking particularly strong in terms of a rally, but again, we're trading around the volume point of control. We did a post back here somewhere. I think it was, can't remember how far back it was. It was really looking at this volume spike here on this particular bar and the amount of volume that was going in there, and really just saying, look, this market is looking pretty fragile. Then we had this rollover, which duly followed. Market's trying to recover, but it still looks pretty fragile. This rally here is not particularly strong. It's not giving you that sense of, this is going to take off. So we just have to wait and be patient if we're trading index futures. Let's just have a quick look at some of the other markets. Some are moving. Certainly oil was earlier on. That's been rallying. We did a post on that a couple of days ago, looking for oil to go up to somewhere near $60 a barrel, I think, on the weekly. This is the weekly chart. Let's pop that up full size. It's really going back to, where is it going back to? Well, first port of call is we've got a nice low volume node here. And remember that volume acts as resistance and support in exactly the same way as price does. So where you have a low volume node on the VPOC, then on the VPOC histogram, then you would expect the price to move through there fairly quickly. It will not require so much volume to drive through there because you've got relatively light volume ahead of it and nothing in the way of price resistance overhead. So in terms of where is this going from a technical perspective, putting the fundamentals and OPEC to one side for a moment, but from a purely technical perspective, It will certainly get through this level pretty easily. Then we start to run into this much more serious volume, which runs all the way out to the volume point of control, which is the heaviest. So in terms of the price, it's going to go somewhere from 55, where it is at the May 80, on up to around about $62 a barrel, something like that. And at that point, you would expect it to congest if it gets that far. So basically, it's hopping through this region, then we run into resistance, and then we start to hit the volume point of control above. And that principle applies whether you're on a 1 minute chart, a 15-second chart, a daily chart, a weekly chart, makes absolutely no difference. On the 5 minute, just dropping down here, we've got volatility triggers all over the place, ton of volume coming in. You know, this is what the cash markets do in terms of opening up in related markets. Lots of volatility in here. You know, we're going to trade inside there. It's, to my mind, it's still bullish, though. Depends on what happens in the OPEC meeting, and also the oil inventories will have an impact as well, of course. Let's just change that back to daily. There we go. Okay, that's back to daily. Hopping on very quickly over onto the softs. Let's have a quick look at the soft commodities. There we go. And it really just makes the point that whatever you're trading, the instrument, the market, obviously when you're in the softs, this is for soybean, corn, and wheat on 5 minute time frame, and I've got the daily strung out across the bottom as well. The indicators work in exactly the same way. Volume price analysis works in exactly the same way. The only differentiation on trading a soft commodity such as this is you have to understand the agricultural consequences, the fundamentals, in other words. But the technical aspect of trading these charts is identical. It also shows you that when the cash markets open in stocks, then you also get this volatility in other markets as well. A lot of volatility going on here. You have to wait for the markets to calm. Again, you can see the volume point of control. We've got a strong level of resistance up here in terms of, let's pop that up full size. This is what I mean. There we go. It's all a little bit sluggish. I have to be a little bit careful. Again, you can see the strength of that level there. It comes up, it's testing it. It just gives you a focus of where the market is going to struggle. You can see the speed it's moved through this region here, a low volume area, went straight through there with absolutely no problem at all. That was at the open. But then if that was in a normal trading session, that's what you expect to see. You're looking for those opportunities. And as a trader, it gives you that heads up on, you know, what is going to happen next to this price action? How is it going to react to the support and resistance from a price perspective, or how it's going to react to support and resistance from a volume perspective? And it's one of the powerful reasons for having the VPOC there. It gives you these low volume regions, these high volume regions, where the VPOC is, where is the market going to pause, where is it going to slice through very easily and present me with a trading opportunity. You can see the VPOC here. It's pretty much on all three. Again, it's right in the firing line, and therefore we just have to wait for it to break away. We have to wait for volume to give us a signal. And then, of course, it's down to setting your levels. Where are your price levels? What's in the way ahead? Have we got price-based resistance or support ahead of us? Have we got a lot of congestion ahead of us in terms of volume? Is it light volume? Have we got a low volume? No, perhaps, etc., etc. And it's just choosing your timeframes accordingly. Right, let me just running up to 3 o'clock. We've got another webinar at 3:15. Just go back to the indices and see if they've settled down and at all. Here we are. This is the YM. So we're on the YM. It's the March contract. This is on 15-second, 1 minute, 3 minute, 5 minute, 10 minute, and 15 minute. Just starting to recover, just starting to develop a little bit of a trend. And as I said earlier on, the first thing that will happen is it will develop on your fastest time frame. 15 seconds is pretty quick. I appreciate that, but the principles are exactly the same. You can see the trend monitor here. We've gone through that bullish phase. We've had a classical transitional color change here. We've gone from bright red to dark red, out into dark blue, out into bright blue the other side. And that's, you know, the traditional change in color that you're looking for on the trend monitor. I haven't got the trend dots on here. Absolute heap of volume coming under here. You can see what we've got. We've got a volatility trigger here. So what are we expecting? We're expecting congestion at that point, and we haven't got volatility anywhere else, I don't think. Let's have a look. On 1 minute, no. A little bit of weakness coming in here. We've got some price-based resistance overhead, stronger price-based resistance up here. The volume's falling away though, so the volume fall away is good. we've got some price-based resistance that's got to be overcome. You can see it's been tested a couple of times here and held so far. If that breaks through, then that's positive. Otherwise, it's going to cap it. The trigger there on the volatility 15-second would just give you a heads up as to why you're seeing congestion starting to build over on your slower time frames. This is on the 3-minute. Just pull that up. Volatility, as I said, we're trying to break away, but you can see the level of resistance that's sitting there overhead. So if you were looking to trade this, perhaps to the upside, the triggers, if you will, to get in would certainly be somewhere beyond this level at 600. Certainly beyond this, so up into here. Once you're up into here, the good news is you've got low volume, so that's positive. You have got these levels here, but they are not as strong perhaps as this level, although this one at the top here is stronger. So in terms of an opportunity, if you were scalping this, the opportunity is between 600 and 630. If you get through 630, then you're home and away, and you should be off up to, you know, the slower time frames. And let's just take a quick look and see what they are looking like. And this is what you're doing the whole time. You've got this level here. It's defined at this sort of 600 break point. Above it, you've got a nice low volume node. Yes, the volume builds accordingly up to the 630 region, but it's nothing like as heavy as over here. So in terms of opportunity, yeah, it doesn't look too bad. This is the monster up at the top here, which is really going to cause a problem in a similar sort of way. So in terms of taking opportunity there, what are you looking at? You know, possibly 30 points in here if it gets up there, and obviously you'd be looking at the volume, the associated volume profile down here. Remember, you're always going to get this kind of profile. This is the surge at 2:30 our time, and the volume then falls away and drops accordingly. So you have to let this settle down. You have to get into the trading session, and you just sort of mark the card, if you like, as to what opportunities you think might be available depending on your time horizon. You might be an out-and-out scalper. You might be quite comfortable trading a 15-second chart like this. To me, it's not scary, but I know a lot of people, it is scary to look at a chart like that and think, you know, it's 15 seconds. But there are opportunities in here. If you're quite happy jumping in and out, probably with a fixed stop loss, you have it all set up. It's one click of a button, one in, one out. And that's it. You know, there is really no problem if that is your, if you're mentally suited to taking that sort of approach to the market. Right, we're going to wrap up there. We'll be back in 15 minutes. Let me just run through very quickly where all the bits and pieces are. QuantumTrading.com, that's where you'll find all the indicators. TradeStation, I showed you earlier on, was on the interactive brokers feed. What Anna will show you in a minute is the one on the TradeStation securities, where we're going to be focused on stocks. So they are all there at quantumtrading.com. And remember, if you invest in one indicator and or a bundle of indicators and you then want to upgrade the full package, when you invest in the full package, you get all the indicators we develop free of charge. They're just added to your account thereafter. And remember also with TradingView, I haven't pulled TradingView across at the moment. I've got it over on the right-hand side. With TradingView, that is a browser platform, so you can use that pretty much on anything you like with all the tools and indicators. This is where you'll find the Forex program with the funding program, which we've bolted on now. It's been very well received, and we've actually updated it and made it even more attractive by increasing the profit returns. We've increased the market coverage, so now you can actually trade on the first level up from the evaluation stage. You can now trade indices, and you can also trade gold. We've increased the leverage from 5-to-1 to 6-to-1. And we've increased the profit return to you to 50% at that level and up to 60% at the $2 million level. So it's a great way to trade with no risk with our money. And once you've been on the program, to actually leverage your knowledge with little risk to yourself. You're not using your money, you're using our money. Finally, just very quickly, that's where you'll find annacooling.com, all the books on Amazon, both in Kindle and paperback, and all the links to the various sites. We're going to run. We're back in 10 minutes. So thank you so much for coming along to this one, and we will see you shortly. So thanks very much indeed, and bye for now.